Hi, I'm going to do a quick update on the small account challenge. Hi, and a warm welcome to you all. For those of you who haven't been here before, my name is Langers, and I am the Scruffy Trader. What I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, please share the videos, click the little subscribe button, genuinely helps, and we'll crack on. So what is it that I'm looking at when I say I'm looking at a small account challenge? Well, I genuinely am putting trading in the real world. Contrary to belief, this is what I do for a living. And as with most jobs, you need to learn your task, you need to understand that task, and then put the task into action. So I thought the easiest way to do it was to build a small account up over a period of time. Now, if you go through some of the other videos, I started with £200, and this began on 10th of February when we decided that we would do this. And I'll do an update on the 1st of each month. And the idea is just to show you that it's a marathon, not a sprint. See, I've been in and around the charts for over 15 years. You know, I did trade in a former life in a different capacity. It was forward purchasing of currency. So it was long-term stuff that I used to do, but as of now, and has been my career for the last number of years, a day trader. I make my money on the fluctuations throughout the day. Now, when you are looking on the land of make-believe, or what you call Instagram, it is shown as quick money, like this.
You ding-dong!
Give it to me again.
You ding-dong!
Of course it is. There's a number of factors that come into trading, and one of them is capital. You see, it's all well and good saying you're making millions in one thing and another, or whatever. You need a good amount of capital behind you just to open up a trade. Now, it took me nearly 4 years to build up an account big enough to pay me a living wage. And what I'm doing at the moment with these little challenges is showing you exactly how I built it in the first place. You know, it wasn't built in a day, not like what those sort of videos will show you. The idea of getting in and out of the markets very fast, making a fortune on every one of them, is ludicrous. And to think you're going to do it on £200 is little more than winning the lottery. But what you can do with a small balance is build it up over a period of time. And if you're sort of put my teeth back in, event horizon, in other words, where you want to be, is 2 to 3 years down the line, then you can start with a small balance, build it up every single day, and suddenly you'll find, just by the compounding effect, you will get to your destination. Because ultimately that's what we're all trying to do. We're all trying to get to the same destination. We just use different roads. And the road that I'm taking is day trading. So let me have a look. I'm going to pull up the sheet, show you the figures. I'll show you how to fill it in, because I was requested by the guys if I would. There you go. Put my results in as we go, and asked if I'd show how you fill it in. So that's kind of the premise of this video. So let me show you the sheet and we'll take it from there. I'll come back to that. Well, actually I can show you it straight away. It's the 1st of March. I've just finished today's trade, which is what was on that screen. It's showing me a balance of 307.43. 2.6% growth today. My target for a day is 1.5. Okay, so if I just pop back, you'll see that is the trade that I've just taken. Okay, or the 2 trades I took this morning. That's me done with this for the day. I don't go into it too much. I just look to get in and get out, and that's it. And once I've done my daily target, I stop. But I'll touch on that in just a second. And if I go out to the main, there you are. See, it's a live account. There is the balance within it. And we've got nothing running at this moment in time.
No way.
So give me a second and I'll just pull up my sheet.
Well, we're waiting.
There we go. Okay, so this is a sheet that I use pretty much every day. And when I'm setting out to build a plan or a goal, shall we say, I look at this. It's not set in stone. It's just a guide to kind of try and show me where I want to be. So I'll look at a compounder, see how long it was going to take me to get to, in this case, 2,000. That's going to take me 8 weeks. If I started at 50p and I am able to compound my bid size by 5% each trade. Is that feasible? No, it's not, because it goes back to capital. You know, sometimes the capital doesn't allow you to increase your bid size, and I'll touch on that in just a second. But what it does is it gives you some broad strokes as to how and where you're going to be. And with this, it kind of just shows you. I try to get up to 5 positions and then I'll stage them in. And I kind of base it on 10, 20, 30, 40, 50 run. Doesn't always work like that, and it's hypothetical. All right. But what it does is it kind of shows you what can be done. The one I'm more interested in is my wage maker calculations, because this kind of pulls it into reality. And what do I mean by that? Well, if I enter my goal in and I can only be at 50p per pip, which is here, that's going to take me 400 days, 400 working days to achieve. All right. And I need to get 1.7 trades per day. It's an average win of 10 pips. Okay. So it's not impossible. So even getting your £2,000, which on a £200 balance is massive. You tell me a bank in the land that will give you £2,000 on 200 in a year. I think you'd be lucky if you got £5 in a year. In fact, I don't even think you'd get that the way it is now. So that is doable. What if I wanted to only trade once a day, but I still want £2,000 in a year? Well, trade once a day. I need it to be 81 pence per position, and that'll give me my £2,000. But when you're looking at this side, the way it's working it out, again, it's working on the average, and it's a 5-day week. It's working out how many weeks is in a month, how many months is in a year, you know, because there's 12. But when it looks at the year, it's assuming you're only working 48 weeks, which is why sometimes the figures look a little bit skewed. Why is that? Because you might want a holiday, you know, take some time off. I'm supposed to be on holiday this week because this time of year I go away every year. Lockdown's here, can't go. So my next holiday would be around April the 15th, because I'm normally away for my birthday. I think that one's not looking good either. Then we have a summer holiday. Might get that one. And occasionally we I have weekends away in September, but it looks like the next one's going to be December, when we go away for Winky's birthday. We like our treats. Anyway, by the by, that's kind of what this goal is all about. It's about paying for those holidays. All right. So I hope you kind of get an idea of what that is. But you can also change it up a little bit. And let's just say you want to earn £30,000 per year, which is a good salary. It's a decent salary, 2 times minimum wage, if you like. But you want to do it as a day trader, like what I do. Well, again, comes back to capital. How much you can put on per position to get. Now, I look to trade once, twice a day. So if I run down the scale, there's twice a day. I need to be around £6 a position. And I need to be doing that twice. Now, there's other ways you can do it. If you've got a big enough bank account, you know, because you can open up £6 on a 5,000 account quite easily. You can easily do it on 10,000. If you've got 20,000, it's a breeze. 50,000, dip in the ocean. But not be greedy. You know, your bid size must be representative of the capital you have in your brokerage or your account that you keep to one side. I may want this to be once a day, so it's there. So I've got 2 choices. I can open up one trade at around 10 to 12 quid, get 10 pips each day, quit. And that'll get me 30 grand a year. And it does. Simple as that. Right, so that's kind of what I use these for. And actually, I'll show you a quick website that is quite handy to have. It's called the Daily Compounder, which is this one. If you started with 200 quid, 1% per day, and you're looking at 1 year, don't include your weekends because the markets are open on a weekend, so deduct that. Reinvest 100%, in other words, you're not taking anything out. What would you get after a year? Well, what do you know? You get 2.5 grand. That's it. 1% per day. Okay. So it is feasible if you set your stall out.
Isn't that logical?
So where are we at? Anyway, now I've rambled on a little bit about that. Well, where I'm looking at the moment is this. Started 10th of February and we are up nearly 50%, which is, I think, pretty damn good. But I'm only basing it on 1.5% per day. Okay, which if we look here, it's 1.5, so it's only £4.50 a day, which is 6 pips. But average trade we look to get is 10. So this is well doable. It's very, very simple. How does this fill in? Well, it's very simple. You put your start there, that is it, and it starts pre-populating right the way through. We didn't do anything in January, so it moves over. This is all pre-populates itself. In here, you just put in some simple rules that you're going to stick to. Up here, you put in the percentage that you want to work to, whether it's 1% or, in my case, 1.5. And it works it out. And it works out how many pips you need to get, so it helps you target based on the bid size. The bid size we increase by whatever number you put here. Now I'm being quite aggressive. I'm trying to get it up to a higher bid size quickly to achieve my goal quickly. So I'm looking to increase by 10% each time that I win. Okay. So my next bid, which will be for tomorrow, is I'm now working towards 83p per bid. The problem I have with the bid sizes is the capital. Because if I can't open the position, because for argument's sake, the margin is £350 to open up an 83p position, I have to cut the position back. So what I would do there is I would look to see what the lowest position is, say it's 50p, and then maybe add 10% to that. So I might open it up at 66p. Gives me a little bit of breathing room till it gets to the point that the capital catches up to the bid size. And that's what I was talking about, the compound plan being in a perfect world. Sometimes the capital doesn't add up. All right, so you have to wait. And that's why the 8 weeks was a bit unrealistic. I'd give myself a year to do this, 12 months. All right, if I do it quickly, result. If I don't, well, fair enough. But it's telling me what my average win is. Average win is £2.39. But what you got to remember is it is pennies. Some are even down to 10 and 20 pence. So it's peanuts. Average win 5.8. So it's more than what the target is. Result. Wage, not drawn anything out. And what this is telling me here is, again, it works out how many trades you need. Well, if we're working on an average of 10 pips per trade, I only need to do half a trade. 5 pips. And then filling it in is about as simple as it gets. Put your date in. You enter your balance, which it tells you here. How much risk you're willing to put on. Now, in the early stages of building an account, you have no option but to put risk on. None whatsoever. You know, you'll always see the educators saying it's 1 to 2% of your capital. And to a degree, they're right. However, on a small account, it's impossible because you've got nowhere to go with your trades. You know, you're not going to work with a 2 or 3 pip stop. So you must take risk on. And what it does is it teaches you how to look for the A1 setups, the best setups. And that's why I only trade once or twice a day. I wait. Get the best trade that I know I'm going to succeed on. Get in, get out. Simple as that, guys. It really is. But what it will do is, based on the bid size you put here, is work out what your maximum stop is. How far it wants to be away. So you can set it at 49 pips away. Nothing wrong with tightening it up once this trade starts moving in your favour. But you know that is your absolute. And that's how much it's going to dent your account. All right. And you can put in your profit and loss. And actually on this example, I lost. Because I don't win all the time. I do have a good strike rate. That is there. 92%. And what happens? Well, it then works out your percentages. So did I win? Yes. Did I lose? What was the balance change? In other words, what was the percentage increase of this? Works it out for you. Works out what your risk reward was. How many points you took. What the market is. This section here is just a code I use because I break trades up. I assume it's one trade. So if I enter the market with 5 positions, the way it would be coded is 1 TP1 would be the first take profit, 1 TP2 would be the second take profit, 1 TP3 the third one, and so forth. But it's essentially one trade, all right, because it's taken on the same setup. Did I go short? Yes or no? What kind of mood was I in? Was I in a good mood, bad mood, agitated? And that's a good thing to record. Because if you start seeing a pattern where you're tired all the time, and when you're tired you lose, go to bed early or take a break, that sort of thing. Helps you give a little bit of thought process to your planning. and then a couple of reasons why you got in, whatever. Now I record every one of my trades. That's where this channel came from. And all I need to do is I just need to know the date, the product that I was on, a rough reason as to why I got in, and then I can play it back. And what I do that for is just so that I can not so much see where I win, it's where I lose, because they're paid lessons in not what to do. Simple stuff. Kind of just a strange way I look at it anyway. But there we go. And then obviously this section here, this is just the goal itself. What you are looking to achieve. Well, 10 times 200 is 2 grand. And then it breaks it down into what I need to do pretty much each month over the course of a year. And that's it, guys. Very, very simple way of looking at the markets. At the moment, I am more than happy. We are well and truly up at the moment. And today, already done what I needed to do. First trade out of the bag, didn't quite hit the 1.5. The second setup came, which achieved what I needed it to do. Stop. Simple as that. And it's 4:15 now. I was finished early afternoon. And then I'll do it again tomorrow, the day after, and the day after. And each one of these times that it builds up, the balance increases constantly, which means the bid increases constantly, and I ain't stressed because I'm not chasing. That's right. I'm not chasing unicorns. I'm just looking to slowly build up an account. As that account builds, it'll pay me. So I hope that made sense. If you're interested in following it, by all means subscribe. If you're stuck, my contact details are in the description. I genuinely answer every single person that messages me. So as always, guys, do what you love and the money will follow. See you all in the next one.